Welcome, pro traders, to another Monday market review held by GoPro Trading Academy. And it's yours truly, Ian Giffen, bringing you the scoop from everything that happened in the last week or so, as well as our outlook for the week ahead. And of course, if you haven't subscribed to our channel already, I really recommend that you do that and hit that notifications bell. We do bring out professional training on a regular basis, and you want to have access to that as soon as it comes out. All right, well, just a quick pointer to the theme of the markets over the last week is that we've certainly still got quite a lot of activity across the board, but many of the instruments that we were trading the previous week ended up pulling back in quite an extended retracement wave through the course of last week. So we're looking at the sort of temporary interruption, at least, of some of the broader pattern moves that we've seen across the market. But that's not a big surprise either necessarily, particularly with the approach to the festive season. As many of you know who've been involved with my trading for the last 5 and even 10 years, you will know that as we approach the festive season, we look to step back from the market. Apart from the fact that it's nice to have a good holiday, the liquidity in the market does tend to drop away. And of course, that's always a good reason not to trade any instrument. Certainly, that accounts for the market as a whole as well. Right, so if you've got any questions as well about anything that I'm covering over here, particularly if it contradicts your view of the market, I'd really be happy to answer any questions that you might have. So just drop those into the comments below. Always happy to have a discussion with anybody. I always answer any questions personally as well. All right, so let's just jump into, from the top as always, the Euro USD here, looking at the weekly time frame. The fact that we've got quite a lot of movement here already on a Monday with the rest of the week still to come is giving me some hope that this, as our last week of trading for the year, is going to be action-packed. Looking like this, though, on the daily time frame, which is noting that last week's candle was yet another bit of a hammer doji candle, indicating quite a lot of indecision in the market. And of course, you can see on the daily time frame that that is very much the case. Now, of course, it's still relatively early on, even in the day, let alone the week. So we're not going to jump into any predictive conclusions, not that we ever do, about what's going to happen with this market. But certainly there seems to be some movement early on in the week. For us to be able to trade this pair using our core strategies, we're looking for that breakout, either a bullish or a bearish breakout. You can see using our LPO range here, the most applicable method for defining the range at the moment. We are still stuck very much inside of that. The HDC channel, the top boundary, still got some way to go to catch up with that, but that should happen probably by the end of this week. Let's wait and see what happens there. But at the moment, certainly nothing for our core strategies. The GBP weakness that we experienced over the last month and more certainly came to a bit of a pause through the course of last week. And you can see that low test hammer there representing that on the weekly time frame. And then, of course, here on the daily, it did make one further downward test showing increasing weakness in this bearish market, certainly into the latter part of last week, Thursday and Friday, giving us a bullish impulse candle. Not that much happening yet today at the start of the next week. So this is still a trend, just a trend, with the bearish impulse candle closing below the previous wave's low. That is true, but a lot of weakness has started creeping into this market. So at the moment, we are biding our time. If you're looking for a class 1 pattern, well, certainly you don't have that at the moment. And if you are a channel trader, you need to wait for a break and close below the channel boundary. Right, so moving on to dollar yen, weekly time frame again as a start. This has really been something that's been pretty dead for us now for the bulk of the last couple of months. We did have, as you know, that false breakout, which gave us a break-even trade without it going any further. And it's just pulled back into this broader ranging area. And certainly last week, as you can see, the market went broadly sideways. So nothing for us to do there. And that's quite a common theme across many of the instruments that we trade. Here you can see dollar Swiss, likewise, also stuck inside of a range on the weekly time frame, and very choppy here on daily. So yet another pair that certainly we wouldn't be interested in trading the way things stand at the moment, and left it alone last week. The loonie, USD CAD, you can see that we had that high ringed with last week's bearish candle, but it's still inside of the channel. There's no valid pattern here, so nothing doing for using daily on execution time frame. And you can see as well that that bearish candle looks pretty much like this here on daily, showing a very strong reversal through the latter part of the previous week and the start of last week. That really brought that bullish trend to an abrupt end, which is fine. We stepped back from that market immediately. And again, you can see the LPO channel here giving us the best estimation for the current assumed range for the market. Of course, if we get a continuation, we need a bullish breakout, or possibly more likely a reversal, giving us a bearish breakout on this one. But at the moment, again, nothing for us to do. Aussie, another instrument where you can see we had that previous bearish breakout the week before, but last week it just pulled straight back inside of the channel with a relatively strong bullish candle there. And looking like this on daily, you can see that although it hesitated towards the end of last week, through the early part of Monday, certainly Tuesday and Wednesday, it turned around very abruptly, bringing that bearish strength to a complete and abrupt end. So also not touching that, and with good reason. The Kiwi, similar picture, not quite as obvious as the Aussie. Let's have a quick look at this on daily as well. You can see that the bearish move has shown weakness, but it is still, at the moment, it is still intact. We still do have this bearish trend intact. For those of you who purely channel traders, if we get an outside close at the end of today, you'd be looking to short this using the H4 as your execution time frame. But that's pretty much all that we can look at on that one at the moment. With any of these instruments, if you start seeing that cyclicity breaking down, look out for your overlay trades as well. All right, so Euro Yen, another one. You can see that this picture, as I mentioned earlier on, is pretty obvious here, just on the weekly time frames, with a bullish candle coming immediately after that bearish breakout that we had the week before. So really nothing for us to do there. And likewise here on daily time frame, that picture looking like this on daily. And here you can see we have had, we've had multiple breakdowns, if you like, in that cyclicity. The bearish cyclicity on this broke down previously. It tried to resume, but didn't actually go anywhere. And then again, last week, of course, giving us a bullish impulse wave. So that impulse phase one wave, if you wanted to look at that from an LPO standpoint as well, would look like that. So remember, if you got a phase one followed by a phase one, that's pretty much what you'd be looking at. I know a lot of people still also taken that previous wave up here, and either way, you're looking for the most significant level of resistance to define the upper boundary of your potential range. Either way, we can't do anything with that. We need to see a breakout. Here on GBP Yen, Twisted Sister, again, you can see that we are still very much inside of the channel here, but with that bearish move having come to an end last week. So no breakout for us there at all. And a similar picture to what we've just seen on the Euro Yen. So these Yen pairs really not giving us any action at all. I know that a couple of the folks have been trading this using the overlays as well. And you may well have gotten into a bullish overlay this morning on this pair, which would be doing very well at the moment. Swiss Yen, we've had that previous bullish breakout, and as you know, on the weekly time frame, it did come back inside of the channel, but it's been flirting with the support level for quite some time. And last week, as well as the week before, it managed to sustain itself outside of that channel. Hasn't been doing much else, but if you look at this purely from a technical perspective here on the weekly time frame, that low was ringed last week, which of course gives us, which is a bullish signal for a selection time frame. So dropping down to daily doesn't look like much here at all, with that bearish retracement, effectively the bearish cyclicity having broken down completely, and it's now basically just going sideways. So any bullish resumption here well, if you were going to trade a bullish resumption, you just need to determine how aggressive you are with your pattern classification. So if you were waiting for a class 2 pattern, then you'd need to wait a bit longer. Whereas if you were prepared to go ahead with a class 3 pattern, you'd probably be long on this one already and trailing your stop, but without the market having actually gone anywhere yet. So obviously that being a little bit more aggressive. Cad Yen on weekly, similar picture, except that deeper inside of the channel here on the weekly time frame. Another low having been ringed, bringing that bearish retracement to an end. And again, looking like this on the daily time frame, however, where you can see that much as that strong bullish move that gave us that ringed low last week has not actually led to a breakdown in the bearish cyclicity. So technically, this bearish wave on weekly time frame, represented by the cyclicity here on daily, is still intact. So if you're using dual time frame technical analysis, you're waiting for the breakdown in cyclicity. Now that may well come in the next couple of days. If we get a ringed or isolated low here without it going any lower than that low, and a resumption of a bullish, then certainly that would be a relevant setup for your hybrid strategy. And as soon as we start moving into those class 2 patterns, then you'd be able to trade that on daily impulse, as well as, of course, then dropping down to the lower time frames for execution as well. Right, so Aussie Yen, deep inside of the channel here on a weekly, nothing doing. We did have, again, a similar picture, just looking at these two candles, rail tracks as they're called, next to each other. We've seen that theme across the board now, and here you can see almost identical picture to what we looked at there on Cad Yen. So these yen pairs, there's lots of correlation between them, which is why we look at them all together. Kiwi Yen, similar kind of picture inside of the channel, and so is rail tracks last week, looking something like that. So bearish, again, bearish cyclicity still intact here, but this could come to an end at any point in time. So for us, we would need, for this to be our execution time frame, we'd need to have had either a class 1 pattern here on weekly, or at least be outside of the channel, neither of which is the case. So we're still leaving that alone. Euro GBP, moving into our euro crosses, you can see here on a weekly time frame. Last week, really nothing with that doji candle deep inside of the channel. We haven't really touched this for quite some time. However, we did have a breakout of our 4-wave channel here. So that strong breakout last week, Wednesday, however, turning around immediately on Thursday and pulling straight back inside of the channel, which means that there was really nothing for us to do. So we're sitting on our hands, really, has been the theme of a lot of what we've been doing over the last couple of weeks. Euro Swiss, likewise, you can see that there's a turnaround over the last 2 weeks. Last week's candle, completely opposite direction. All of that, any trades that we were in before that basically got stopped out. And that's why it's so important to manage your downside aggressively. Limit downside and let upside look after itself is really the name of the game. And of course, that's the heart and soul of convexity. Right, Euro Swiss, never a favorite pair of ours, but on daily time frame, you can see that also representing what we saw on weekly. We've had a breakdown in cyclicity over here, phase one. So, if you wanted to put in your LPO channel once again, it's quite a narrow one, and we could get a breakout very easily in either direction. So keep an eye out for that. Euro Cad weekly, last week's candle, that low test coming down, bouncing off of that support level yet again. No valid pattern for us, and certainly inside of the channel. And likewise here on the daily time frame as well, it pulled back early last week. Inside of that channel, nothing for us to look at all. Can run through these quite quickly. I don't think we really had anything to look at last week with these euro crosses. You can see rail tracks again, but in the opposite direction here on the weekly time frame inside of the channel. Yes, we were outside of the 4-wave channel on this one on the daily time frame, and there you can see how well, this is Monday last week. It just rolled over Monday and Tuesday, pulling us straight back down towards this, what was resistance, now support level. And yes, it is respecting it so far, as you can see. And it's worth looking out to see if we get a low ringed here and get any kind of bullish resumption on that. But for the moment, there's nothing for us to do. Euro NZD on weekly as well, similar kind of picture to what we've just seen, deep inside the channel, no valid pattern. And here on daily, not nearly as aggressive a move as we saw on the Aussie. Euro Aussie. But if we are looking for correlation across these pairs, always remember that should we get an end to this bearish retracement and a resumption and a bullish direction, that would be tradable if you're a channel trader. But if you are more conservative and looking for a valid class 1 pattern, there's nothing doing here as well. Right, so our pound crosses, GBP crosses. So here we've had more action in the past, as you know, with that GBP weakness over the last couple of weeks. But last week again, you can see how that just turned around solidly through the course of last week. Any bearish cyclicity broke down with that low being ringed at the close of Thursday. And that means nothing left for us to do on this one. If you're trading overlays, you might have taken a trade there as well. But apart from that, came to an abrupt end and we're out of any trade there. Gbp Cad, you can see here as well. This is on weekly time frame. We were outside floating around the support level, and last week's load test again showing that it is playing around with that this area of support, but it's not breaking through. Certainly not on this time frame. And here on the daily time frame, it looks pretty much like that, where you could see through the early part of last week, we did get a brief breakout below that support level, but it pulled back inside of the channel immediately. Now, if you're a pattern trader, there is the potential for a class 1 M pattern stacking up over here. We're not seeing it as yet, but keep an eye out for that if you are looking to short this market. GBP Aussie, similar picture once again. There is the GBP weakness showing itself a bit better last week, but all that did was bring that bullish trend to a very abrupt end with a bearish impulse wave. And again, there is the potential here for a class 1 M pattern, which would mean a bearish resumption after that very strong phase 1 wave there. So keep an eye out for that one. GBP NZD, well, last week's candle really just a bit of a doji spinning top, so nothing for us to look at on this time frame at all. And here likewise on the daily time frame, it's tested our resistance level and also rolled back. So again, another bullish trend that came to an end last week. And this one, however, not giving any potential for a class 1 M pattern. That's already been invalidated, so we wouldn't look to touch that at all. Right, so moving into our other crosses, here's the Cad Swiss on the weekly time frame. Yes, there is a potential here for a class 1 M pattern as well, if you were to look to try and execute in the daily time frame. But if you also need to take the channel into account, well, we're still deep inside of that. And here on the daily time frame, bearish cyclicity technically still intact, but you can see how we had a strong turnaround in Monday, Tuesday last week. And at the moment, there's no reason to think that anything else is going to happen. Likewise, the pattern here was, well, class 1 pattern was invalidated. The best you're going to get is class 2, and that's not good enough, obviously, for our selection time frame. So another one to leave alone. Aussie Swiss, more rail tracks, as you can see, pulling us straight back. After that previous week's bearish breakout, pulled us straight back inside of that channel. So any trades that we had running in a bearish direction, we exited very rapidly at the early part of last week, and just as well. So this market having pulled all the way back into the channel, and it looks like we've got a bullish impulse wave here in the making. Regardless, this is not a market that is actually tradable anymore with that bearish weakness. And of course, there's no real sign of a bullish strength here either. So yet another one to leave alone. Same thing really with Aussie Cad. It's pretty much the same story. You can see here on weekly and then on daily as well. Almost identical pictures. You can see the correlation across these currency pairs showing themselves very clearly. Right, so the one remaining trade that we still actually are in at the moment is the Aussie NZD. Not doing that much, but of course you can see the rationale for this trade. As long as you're purely a channel trade, obviously, because there's no valid pattern here. This was an H4 impulse where we've had the breakout of the 4-wave channel in the early part of last week. We had a bit of a rollover. I think we actually had an initial attempt at this market, which got stopped out quite early on, followed by a second go at it, which we are currently in. We managed to survive the gap, as you can see, over the weekend, but apart from that, not much happening today. So we really managed to reduce our risk on this one almost to break even. So we really just need to let that one play out. But as you can see, typical Monday activity with very little really happening at all. Kiwi Swiss, another one of those pictures where we've got some rail tracks on the weekly time frame, breakout followed by pullback straight inside of our channel again, and it looks like that on weekly. So yes, we technically still have bearish cyclicity intact on this time frame with this instrument, but it did pull back inside of the channel, which means inside the price territory of the previous retracement wave. That's a sign of weakness, and from a price action point of view means that we really don't want to touch it. The last of the currency pairs that we look at, Kiwi Cad, you can see how it tested on the weekly time frame, tested and respected that support level, at least for the time being, with that very significant hammer candle. And here on the daily time frame, it looks like this. We did get a bearish breakout and an established trend on this one, but we currently were in the latter part of last week in a phase 2 of that trend. So if you are a hybrid strategy trader, you'd be looking for a breakdown of the cyclicity on the execution time frame, which in this case would be the H4 time frame. At the moment, it is still very much intact, however. So remember, if you are going to be more aggressive, you would consider the class 3 patterns, class 3M patterns here on execution time frame. If you want to be more conservative, then you need to wait for a class 2 pattern at least. All right, so those are our currency pairs. You can see there's not that much on the cards at the moment. And just to reiterate what I said earlier, that's not a surprise as we approach the festive season. So for me, it's already an excuse to hang up my trading boots, although we are going to trade through to the end of this week. Right, let's have a quick look at what's happening on gold. Weekly time frame, there you can see just another inside candle bar, spinning top. Not interested in that at all. And here on daily time frame, you can see it's pretty much just going sideways and has done now for more than 2 weeks. Looking at our equities markets, these are obviously very choppy at the moment, and the Dow here on the weekly time frame showing last week a very strong bullish impulse candle, basically opening at the bottom and closing right at the top. Looking at that on the daily time frame, you can see it really went through the course of last week with one tiny little pause in the latter part of last week, but apart from that, it really just been straight up. So very interesting times with the stock markets representing a high level of uncertainty in the markets. We've got fear and greed playing itself out before our eyes. You can see how people don't want to miss out on the next strong bullish move in the equities markets, but these pretty big bearish breakdowns showing us that there is a significant amount of nervousness still in the market, and for a number of different reasons. So you guys know that I don't make market predictions because that's pretty much a waste of time. Anybody who does is pretending that they've got some kind of a crystal ball. But nevertheless, it's looking pretty precarious as far as my experience is concerned. We've seen this happen before. And if you are looking also at the S&P 500, very similar picture. Cyclicity, bullish cyclicity is still intact here on the weekly time frame, no question about it. But we are seeing weakness creep into these bullish moves. So similar picture on S&P here on the daily time frame. But it's going up to test that all-time high yet again. So let's wait and see what happens. And similar picture again here on the Nasdaq. So we've got an inside bar last week. But for those folks who are trading our price action approach, this certainly would have been enough for you to drop down to the lower time frame and be looking to go long on this again. Remember, if you need more than just a class 3 pattern, then, well, that's pretty much what is stacking up at the moment. Should be getting, we've got the potential for a class 2 pattern, certainly. All right, so folks, that's it pretty much from me for the week. As I say, this is going to be our last market review for the year. The next time you will hear from me from for the market review on the Monday is going to be the first trading week after New Year. So I really recommend that you just subscribe to the channel so that you get notified of our next material when it does come out, and that you don't let it slip by you early in the new year. We are going to be doing quite a lot of professional training for you folks as we embark on the new year. So please make sure that you not only subscribe, but hit that notifications bell. Likewise, if you've got any questions on today's markets and the coverage of the markets, then I encourage you to ask me any questions in the comments below, and I will answer each one personally. All right, folks, well, that's it from me for 2021. So signing off for the year. Have an absolutely blessed Christmas with friends and family, and I'll chat to you all soon. Bye for now.